Hello, and welcome. I'm Mrs.NoBody, and today, I'll be taking you through an Elliott Wave analysis of the top 10 financial markets for the week starting Monday, November 4, 2024. We'll explore key markets like the US dollar index, major currency pairs, commodities, and popular stocks, providing you with a clear outlook for each one based on Elliott Wave principles. Whether you're a seasoned trader or just curious about market trends, this breakdown is designed to give you insights that can guide your decisions this week. Let's dive into the analysis. Let's examine the weekly chart of the dollar index and how it reflects market psychology through Elliott Wave analysis. This method shows how crowd behavior influences market patterns, with each wave representing investor sentiment. Starting in early March 2008, we witnessed the beginning of a bull market rally. This rally eventually formed an impulse pattern, marking the end of the motivational phase. Currently, we have entered the corrective phase, characterized by an impulse pattern, and we anticipate a subsequent corrective pattern. This corrective phase could take the form of a zigzag or a sideways pattern that remains within a specified channel, typically ranging from 50% to 78.6% of the previous movement. It's important to keep an eye on the key price levels that could invalidate this analysis. Ultimately, Wave C is expected to form in a bearish market, completing a simple zigzag pattern. A deeper correction may then be required, potentially resulting in a double zigzag. On the daily chart from September 2022, we observed the first drop in the dollar index market, when an impulse pattern extended into the third wave, completing a five-wave channel. Typically, after every rally, we expect to see a correction pattern. In this case, we had one upward wave followed by three downward waves. Based on the current pattern, we can expect a short-term advance in the bull market that will reach specific targets within the Fibonacci retracement range before experiencing another decline, likely taking the form of a zigzag pattern. A closer look at the 4-hour chart provides valuable insights into the current pattern. The Wave A pattern appears to be an impulse, which may also be labeled as a multiple zigzag. We have observed a zigzag pattern that has corrected approximately 90% of Wave A. Currently, the market indicates we are in the first wave of an impulse pattern, showing clear acceleration. It is expected that any corrective pattern will develop and be completed within the mentioned range. The bull market is anticipated to extend, reaching the established targets to finalize this pattern, while we must remain aware of key price levels that could invalidate this analytical approach. The euro and US dollar will be analyzed using the weekly chart. It's interesting to note that these currency pairs exhibit inverse price performance, but their structures are not identical, they differ slightly. For instance, we observed an impulse pattern in the dollar index. However, this market does not adhere to the rules outlined by the Elliott Wave principle, leading us to interpret it as a triple zigzag consisting of 11 swings. Currently, the price action is at the market's bottom and exhibits an impulse pattern. I believe we are in a correction phase, and once this correction is complete, it is likely we will see another bullish wave. It may also be necessary for the market price action to form a double zigzag that further corrects the deeper Wave A. On the euro to US dollar daily chart, we can observe bullish price action beginning in September 2022. Here, we identify Wave A as an impulse pattern, followed by a downtrend and three subsequent uptrends, which could signify a zigzag pattern or a sideways pattern similar to a standard flat pattern. The current market price action, represented as an impulse pattern, is expected to reach specific targets within the 38.2% to 61.8% Fibonacci range while remaining within the channel. It is crucial to pay attention to key price levels that could invalidate this analysis. Once the price takes another action, the subsequent move in the market is expected to be bullish, at least for a simple zigzag pattern. For a more detailed analysis, I have selected the 4-hour chart. As mentioned earlier, the structure of this opposing currency operates slightly differently regarding pattern formation. I recognize Wave A as a triple zigzag and Wave B as a double zigzag. Following this, we anticipate another potential decline that can be classified as either an impulse or a triple zigzag pattern. After the formation of any corrective pattern, we can expect a further decline in the US dollar market until it reaches the next targets. Effective price risk management is essential to avoid invalidating this analysis as we move towards the next targets. Once the corrective pattern concludes, it should complete its short-term move while remaining within the channel. US dollar Japanese yen analysis. I have made adjustments to my analysis from 2 weeks ago regarding 3 currencies against the Japanese yen, the euro, the US dollar, and the British pound. Today, I examined the data using a multiple zigzag pattern instead of an impulse pattern. The key findings from this analysis are noteworthy. In my examination, I identified a zigzag pattern for Wave W and Wave Y, which suggests that we are currently in Wave C, characterized as an ending diagonal during the third wave. Looking at the daily chart and aligning with established rules and guidelines, I can confirm that Wave C appears to be completed within a larger diagonal ending pattern. This is consistent with the formula 33333. The first wave consists of a zigzag pattern, while the second wave, featuring a profound correction, resembles a triple zigzag, which often occurs in the second wave of an impulse pattern. Additionally, diagonal patterns are typically formed in waves 2 and 4. Consequently, we anticipate an advance in the bull market that will reach the identified targets, possibly occurring as multiple zigzags. It's important to note that any correction pattern should conclude within the specified Fibonacci range, and one should avoid entering trades at the key price that would invalidate this analysis. On the 1-hour chart, we observe an impulse pattern. The first wave is a diagonal leading wave, followed by the second wave, which appears as an expanded flat. The advance of the third wave is evident, and according to my calculations, there may be one more wave to the top before a corrective pattern forms. This correction will likely affect Wave A01 and is expected to retrace between 38.2% and 61.8%. Again, be mindful of the price point that would invalidate this analytical framework, as it will influence subsequent price action in the bull market. The daily chart for the NASDAQ 100 market from March 2020 indicates the start of a new bull market cycle. The first wave has progressed, and the third wave of this impulse pattern has advanced to 78.6% of the combined lengths of the first and second waves. However, the fifth wave is shorter than the prior 2 waves in this pattern. We should also consider the triple formation, which is corrected between 61.8% and 78.6%. The beginning of a new cycle very likely marks the third wave, coming after the formation of the first and second waves. I believe the first wave has expanded since both the third and fifth waves have advanced only between 61.8% and 78.6% compared to the first and third waves. Notably, the fourth wave concluded near the second wave from the third wave, which aligns with the rules of trend movement in the Elliott Wave principle. The remaining question is whether the fourth wave was sufficient for this zigzag formation or if it will evolve into a sideways pattern, highlighting the alternation between the second and fourth waves. I will evaluate both scenarios. Upon analyzing the 1-hour chart for a bullish scenario, my wave count for all 5 waves of this diagonal leading pattern indicates an impulse pattern along with multiple zigzags. It is essential to determine whether this pattern is flat or if a deeper zigzag pattern will emerge. Each mentioned pattern should ideally conclude within a range of 23.6% to 61.8%, and we should expect price action to rise, breaking the previous market peak. Following that, any type of correction pattern for extension becomes significant in a rising market. I must emphasize the importance of key price levels that could invalidate this analysis. Now, considering the short-term bearish scenario for a sideways pattern resembling a regular flat pattern, we have observed 3 waves in the direction of the bear market. Currently, we are seeing an A wave, which is an impulse pattern in the bull market, followed by a double zigzag and an extension serving as a diagonal end for wave C, a classic zigzag pattern that has corrected nearly 100% of wave A at a larger degree. If any correction pattern forms at the current price level, it should not breach the key invalidation price indicated in our analysis. The S&P 500 index is generally more advanced than the NASDAQ 100, which is evident in the charts. We begin by analyzing the daily chart. The first wave we observe is an extension within the third wave. Following the completion of the motivational phase, the index has entered a corrective phase. Similar to the NASDAQ 100, it has exhibited a triple zigzag pattern, correcting between the 38.2% and 50% retracement levels. The extension in a rising market during the third wave signifies the beginning of a new cycle. I believe this chart can be labeled as representing the first and second waves. To complete the third wave of the same degree, the first wave is expanded from the third wave, since the third to fifth waves typically range between 61.8% and 78.6% of the ratio of the first and second waves. Additionally, the fourth wave has concluded near the second wave of the extension of the third wave. Once any correction pattern is formed, we can expect price action to exceed the previous peak, indicating an increase in the market and the achievement of set targets. However, according to the principles of Elliott Wave theory and the alternation between the second and fourth waves, if the second wave is deep, the fourth wave typically manifests as a sideways pattern. I have ideas for both scenarios. Now, let's examine the bullish scenario on the 1-hour chart. As you can see, all 5 waves follow an impulse pattern and even feature multiple zigzags. A key difference between this chart and that of the NASDAQ 100 is that the fourth wave has encroached on the territory of the first wave, which did not occur in the S&P 500. According to the rules, this can still be recognized as an impulse pattern. The central question remains whether this corrective pattern will conclude within the projected range. If it does, following a failure to surpass the previous peak, we may see bullish progress in the market. It's crucial to keep in mind the key price level that would invalidate this analysis. Next, let's discuss the short-term bearish scenario. In the bear market, 3 waves formed a zigzag pattern. Here, Wave A was an impulse pattern, Wave B was a simple zigzag, and Wave C was another impulse pattern of the same degree. Wave B has advanced to 123.6% of Wave A at a larger degree, confirming a flat pattern that could be expanded or running. It is important to note that after the completion of the current pattern, any subsequent correction should not violate our key price level. Otherwise, we may experience intense price action in the bear market, similar to the impulse pattern observed in Wave A. A flat pattern may then emerge. Let's take a look at the gold market by examining the daily chart. Since December 2015, gold has resumed its bull market cycle and has formed an impulse pattern. The third wave of this pattern experienced an extension, and after the completion of the stimulus phase, it entered a corrective phase, resulting in a sideways pattern, referred to as a regular flat pattern. The first and second cycles have ended, correcting between 38.2% and 50% compared to the first wave. We are likely approaching the fourth wave of a post-market cycle, and the third wave could be as significant as the previous ones. Waves 1 and 2 have concluded as the market broke out of its channel and continued to rise in a bullish trend. So far, the progress of the third wave has reached 200% based on the ratios of waves 1 and 2, however, we may soon enter a correction phase to complete the fourth wave. Additionally, there is a possibility that a charm wave will occur after the price surpasses the $3,000 range. Now, let's check the daily chart for the third wave. The first wave reflects an impulse pattern, with its initial segment expanded. After the correction phase, the second wave activated, which was a double zigzag, and corrected between 50% and 61.8%. The advance for the third wave consists of 3 cycles, 1 and 2, followed by significant price action that indicates growth. Based on the current wave count, it is likely that we will see another wave in the rising market. After breaking the previous peak and forming any type of correction pattern, this will confirm the trend, otherwise, we may have entered a corrective phase of a larger degree. Let's check the 4-hour chart for a more detailed view of the fifth wave of gold. I observed waves 1 and 2, followed by the third wave, which has an extension. The third wave is fully positioned within a channel and has moved out of our base channel. We can expect some type of corrective pattern to occur, which will conclude within a defined range. The base channel will likely serve as support. After this correction, we anticipate another price movement that will, after surpassing the market peak, lead us to progress further in the bull market. Let's examine the silver chart. Since early March 2020, silver, like gold, has entered a motivational phase. However, as previously mentioned, silver typically experiences more significant growth compared to gold during the final wave and tends to do so a bit later, both during motivational and corrective phases. We have identified an impulse pattern for the first wave within a larger context, followed by a multiple zigzag that formed the second wave, which corrected between 61.8% and 78.6%. After this correction, silver entered a new market cycle. We adopted a bullish stance, which featured 2 patterns, labeled 1 and 2, before the third wave took place. Based on the current data, I believe the third wave has been completed, and we have now entered a corrective phase. The third wave advanced nearly 200% of the first wave, and given the current state of the gold market, it seems unlikely that gold is ready to form the fourth wave at this time. It is important to note that we may have entered the corrective phase of the fourth wave in silver. However, if gold experiences substantial growth, there remains a possibility for silver to see another advance in the bull market. Now, let's analyze the third wave on the daily chart. We have 2 cycles, labeled 1 and 2, followed by the occurrence of the third wave, which contains an extension within it. The fourth wave formed a double zigzag. The main question is whether the fifth wave has been completed if we have entered a correction phase, or if silver can still reach a new peak in the rising market. Additionally, it is important to consider the fifth wave. All 3 waves are nearly equal in size, but the current scenario suggests that we should exercise patience until the price of the fourth wave of the impulse pattern breaks and extends into the bear market to complete the fourth wave in a larger context. Now, let's take a closer look at the 4-hour chart. The first wave consisted of an impulse pattern, while the second wave was a zigzag pattern that corrected between 50% and 61.8%. The third wave advanced 123.6% compared to the first, while the fourth wave formed an expanded flat, correcting between 38.2% and 50% relative to the third wave. The advance of the fifth wave is almost equal to the third wave. In some impulse patterns, all three motivational waves can be nearly equal in size. I expect the market is entering a correction phase, and the failure of the fourth wave compared to the fifth wave in the impulse pattern could serve as a valuable confirmation of advancement into the bear market. Additionally, exiting the channel may provide further confirmation. Any type of corrective pattern could indicate continuation, so it is essential to pay attention to key price analyses that may signal another potential advance in the bull market. The Brent oil market is analyzed through the daily chart. Since April 2020, the oil market has entered a new bullish phase. The extension within the first wave signaled the expansion of this initial wave. Following this, three corrective waves approached the fourth wave, marking the completion of the second wave. The acceleration in the third wave broke out of the channel, becoming almost equal in length to the first wave. The fourth wave formed a triangle supported by the base channel. Eventually, the equality of the first and third waves led to a compression of the fifth wave, signaling the end of this stimulating phase and the completion of the first wave to a larger degree. However, the correction phase exhibited chaotic characteristics in Wave A. Upon closer inspection, I identified it as a triple zigzag. Due to overlaps in microdegrees, I classified Wave B as a simple zigzag. I anticipate the possibility of a triple zigzag occurring once more, concluding within a defined range, leading to an increase in oil prices as we enter a new cycle for the third wave on a larger scale. Let's take a more detailed look at Wave A in the daily chart. Based on the development of each wave compared to its predecessor with 11 swings, I have labeled it as a zigzag pattern. Wave B manifests as a simple zigzag. Wave C has progressed as Wave B has corrected 90% of Wave A, thus, it can also be viewed as an expanded flat pattern. The price action following the correction of Wave B indicates a zigzag pattern for Wave W, a double zigzag for Wave X, and then a double zigzag for Wave Y. Currently, it is anticipated that there are 3 more waves left for Wave X. However, it's essential to consider the defined range and the key price level that would invalidate this analysis, ultimately leading to the completion of Wave Z. I have also examined the 4-hour chart. Wave W appears as a simple zigzag, and Wave X is represented by a double zigzag, consisting of 7 swings. Consequently, Wave Y is also a double zigzag and is equal in length to Wave W. Wave X is expected to be more complex, following 3 additional waves in a short-term bullish market that will reach the specified prices without exceeding the critical price level in our analysis. Afterward, we can expect another zigzag to complete Wave Z. We will examine Apple's performance on the 4-hour chart. I have 2 ideas to share, starting with the first regarding cycles 1 and 2. In this analysis, you can observe that the first and third waves are nearly equal, while the fifth wave is shorter than the preceding 2. The second wave exhibits a lateral pattern, resembling a regular flat correction, which retraced between 38.2% and 50% of the first wave. Following this, a new cycle emerged that was equal in length to the previous wave. 3 corrective waves have retraced between 50% and 61.8%, leading to another impulsive pattern. Here, the second wave appears as a flat pattern that concludes within a specific range. The key price level in this analysis must be maintained, after which we will likely observe further price action in a rising market, breaking above the previous peak. This upward movement is crucial for extending any type of corrective pattern. You can see that in cycles 1 and 2, waves 1 and 2 have been completed in a larger trend, while the second cycle has not yet concluded. There is a possibility that a sideways pattern may form and end within the specified range. It is essential to maintain the key price level in this analysis to invalidate any incorrect assumptions. Once the second wave is complete, we will anticipate the progression of Apple's market price. Let's analyze Bitcoin using the daily chart, where I want to share two ideas with you. Since 2022, we have entered a new cycle in the bull market. I consider the first wave to be a leading diagonal. The third wave advanced by 138.2%, while the fourth wave formed a zigzag pattern, supported by the base channel. The extension of the fifth wave was longer than that of the third wave, leading to a larger first wave and resulting in 7 swings during the correction phase. This correction phase was identified as a double zigzag, concluding within the range of 38.2% to 50%. The key question now is whether this pattern is sufficient or if it may evolve into a lateral pattern, such as a regular flat. For a more detailed analysis, I examined the 4-hour chart for a price target of $73,794. The initial decline occurred in March 2024, forming a double zigzag pattern with 7 swings. The subsequent price action resembled another double zigzag pattern, where 90% of wave A was larger and then retraced. If we are to see a sideways pattern, the critical price levels in this analysis may be invalidated, leading to a swift and aggressive drop. Any corrective pattern that emerges should indicate an extension in the bearish market. Additionally, exiting the drawn channel and surpassing the conservative price estimate would provide valuable confirmation. In a potentially bullish scenario, the situation may be different. The price action starting from $49,351 has unfolded into 5 waves. Each of these can be labeled as multiple zigzags or even part of an impulse pattern that resembles a leading diagonal. After the completion of this diagonal pattern, we should expect some form of correction, which could be either an expanded flat or a running flat. Once this correction concludes and stays within a specific range, we could see accelerated price action once the previous market peak is surpassed, thus leading to the next bull market. That wraps up our Elliott Wave analysis for the top 10 markets this week. I hope this overview has given you a deeper understanding of the trends and potential movements ahead. Remember, the markets are ever evolving, and staying updated is key. Be sure to join us next week for the latest insights on these markets. Don't forget to like, subscribe, and share your thoughts in the comments below. Thanks for watching, and happy trading!